RBI has released a discussion paper on aspects related to charges in payment systems and various payment instruments. My colleague Ritu Singh is joining us now on the phone line with more details on the same. Hey Ritu, good morning.
Good morning, Sonal. The key takeaway from this paper is that at the end of the day, it is just asking questions on various charges and how they're levied, but RBI has not taken any stance. It has invited suggestions and feedback on the paper by 3rd of October. Perhaps after that, we'll see RBI come out with a more clear policy on what these charges should be. The broader theme is whether digital payment charges should be market determined or, they should be independent of the transaction value, and what more transparency can be brought in. So, for instance, on specific charges, RBI says if IMPS or your, real-time gross transfers should rates on that be market-driven, or should RBI prescribe those? If debit card charges should be regulated as well, and whether RuPay be treated differently from other cards when it comes to MDR rates to promote, RuPay. The other question it asks is, will it be more effective, one, to either waive or reduce the MDR charges, or two, to give incentive to card holders when it comes to increasing the use of digital payments? Importantly, it also asks if the zero cost for MDR for UPI should be done away with, and if subsidizing costs will be a more effective alternative to zero charges for UPI, and whether that, if imposed, should be a percentage of the transaction value. So these are some of the key questions that the paper raises. But like I said, no stance has been taken yet. Either way, it seems like RBI is moving towards some sort of regulation on these charges, but it is unlikely that they will be made very high for users, because at the end of the day, both the RBI and the government want digital adoption to go up.